Imagine a world where Bitcoin is no longer just a speculative asset, but a critical part of a nation's financial reserves. The U.S. government has taken a historic step by establishing a strategic Bitcoin reserve, signaling a massive shift in how digital assets are perceived. This move has sparked excitement, debate, and speculation about what comes next. Is Bitcoin the future of national wealth preservation? Will other nations follow suit? And what does this mean for the global economy and everyday investors? In this video, we'll break down the key reasons behind this decision, how the Bitcoin reserve will work, its global impact, and what the future holds for cryptocurrency adoption. Let's dive in. The U.S. has just created a strategic Bitcoin reserve similar to its gold reserves, but instead of Fort Knox, this is all digital. The White House also announced a U.S. digital stockpile of other cryptocurrencies, marking the first time the federal government is officially holding digital assets. The government is also considering zero capital gains taxes for U.S.-based crypto projects. But why is all this happening? And what does it mean for Bitcoin's future? This strategic reserve is an entirely new concept in financial policy. Unlike traditional reserves backed by physical commodities, Bitcoin's value is derived from its decentralized nature and scarcity. By establishing a Bitcoin reserve, the government acknowledges that digital assets have become a legitimate store of value. One key aspect of this move is the recognition of Bitcoin's role as a hedge against economic turbulence. Gold has traditionally played this role, but Bitcoin offers unique advantages, such as being easier to transfer and store. This transition from physical to digital reserves signals a shift toward a new era of monetary policy. The implications extend beyond just the U.S. If other countries follow suit, we could see a global shift in how national reserves are structured. The competition to stockpile Bitcoin could drive its price higher, as governments and institutions vie for a limited supply. Furthermore, this decision could impact regulatory policies surrounding cryptocurrencies. The government's involvement might pave the way for clearer guidelines and a more stable regulatory framework, encouraging broader adoption among businesses and financial institutions. To understand this move, let's look at history. The U.S. economy grew by acquiring land, Louisiana, Texas, California, and Alaska. That was physical real estate. Now we're in the digital era, and Bitcoin is becoming a new form of property. The U.S. is essentially planting a flag in cyberspace before others get there. But there are also strategic reasons behind this. 1. Hedging against inflation. With only 21 million Bitcoins ever in existence, Bitcoin could act as a hedge against inflation like digital gold. 2. Owning the most valuable digital asset. Bitcoin could become the most valuable property in the world, potentially even helping to pay down national debt. 3. Keeping the U.S. ahead in the digital economy. Countries like El Salvador have already adopted Bitcoin. The U.S. is making sure it doesn't fall behind in this financial revolution. Inflation has been a growing concern for policymakers. With excessive money printing and mounting national debt, finding alternative stores of value has become crucial. Gold has served this purpose historically, but Bitcoin offers a 21st century solution due to its fixed supply and decentralization. The digital economy is rapidly expanding. From blockchain technology to decentralized finance, DeFi, financial transactions are moving away from traditional banking systems. By adopting Bitcoin, the U.S. ensures that it remains at the forefront of this shift, rather than lagging behind other nations. Another major factor is geopolitical strategy. Countries like China have been developing their own digital currencies, while smaller nations such as El Salvador have already made Bitcoin legal tender. By securing a Bitcoin reserve, the U.S. asserts its dominance in this emerging financial landscape. Additionally, holding Bitcoin could serve as a financial buffer during times of economic crisis. Just as gold reserves helped stabilize economies in the past, Bitcoin could provide liquidity and value preservation in the event of severe market downturns. Beyond financial benefits, this move could also attract tech innovation. If the U.S. positions itself as a leader in blockchain adoption, it could foster a new wave of startups, developers, and financial institutions that thrive within the crypto ecosystem. This reserve is different from the digital asset stockpile. Here's what you need to know. 1. The U.S. already holds about 200,000 BTC, seized from criminals and dark web markets. 2. No additional taxpayer dollars will be used to buy more Bitcoin. 3. The government won't be selling any Bitcoin from this reserve. 4. Instead, they'll use budget-neutral strategies to acquire more BTC, possibly by reallocating assets like gold. This move essentially legitimizes Bitcoin as a strategic asset, putting it in the same category as gold, oil, and even the 1.4 billion pounds of cheese stored underground in Missouri. One of the biggest questions surrounding this initiative is how the government plans to manage this reserve. Unlike physical assets that can be securely stored in vaults, Bitcoin requires robust cybersecurity measures to prevent hacks and unauthorized access. Additionally, since Bitcoin is highly volatile, the government must develop risk management strategies to handle price fluctuations. This could involve periodic evaluations of Bitcoin's role in national financial stability and potential hedging strategies. By keeping the reserve separate from the traditional financial system, the U.S. ensures that Bitcoin retains its decentralized appeal while still serving as a critical national asset. It also prevents manipulation by central banks, which could otherwise impact its long-term value. Furthermore, by not selling Bitcoin from the reserve, the government signals its belief in Bitcoin's long-term potential. This could encourage institutional investors to follow suit, increasing adoption and driving further mainstream acceptance. Ultimately, this initiative could set the precedent for future digital asset reserves, influencing how other governments approach cryptocurrency investments. The U.S. won't be banning Bitcoin anytime soon. In fact, it's leading the way. Other governments and institutions now have no excuse not to invest in Bitcoin. 1. Other countries, Japan, Singapore, China, may follow suit, starting their own Bitcoin reserves. 2. States like Texas or Wyoming might create their own strategic Bitcoin holdings. Hedge funds, banks, and family offices will now see Bitcoin as a legitimate financial asset and allocate part of their portfolios to it. This shift could mark the beginning of a new financial arms race. Just as nations once scrambled to amass gold reserves, Bitcoin could become the next battleground for economic dominance. The decentralized nature of Bitcoin also presents a challenge for regulatory bodies. Governments will need to find a balance between maintaining control and allowing for the innovation and freedom that digital assets provide. By legitimizing Bitcoin, the U.S. has essentially set a precedent for the rest of the world. Whether other nations will follow suit remains to be seen, but the implications for the future of finance are undeniable. As adoption increases, Bitcoin's value could rise significantly, impacting global markets and pushing institutional investors to embrace cryptocurrency at an even greater scale. Bitcoin is now recognized as a strategic asset. But what does this mean for other cryptocurrencies like Ethereum, XRP, Solana, and Cardano? While Bitcoin has solidified its position as digital gold, these other assets may still play significant roles in the digital economy. There are 4 key categories where these alternative cryptos may thrive. 1. Digital commodities. Bitcoin is now officially recognized as a digital commodity, much like gold. But Ethereum and other proof-of-stake blockchains may also gain similar recognition in the future. 2. Digital currencies. Stablecoins such as USDC and Tether could serve as digital versions of traditional fiat currencies, making cross-border transactions faster and cheaper. 3. Digital securities. Some cryptos may represent tokenized stocks, bonds, or real estate, revolutionizing the financial markets by enabling 24/7 trading and instant settlement. 4. Digital utility tokens. Cryptos like Ethereum, Solana, and Cardano provide the infrastructure for smart contracts, DeFi applications, and NFTs, making them essential to the future digital economy. The U.S. has indicated that while it will not directly invest in these other digital assets, it will continue to seize and hold them when acquired through legal enforcement. This means that although the government isn't actively buying Ethereum, Solana, or XRP, it acknowledges their existence and potential role in the financial system. The rise of central bank digital currencies, CBDCs, could also impact how these cryptos evolve. If governments start issuing digital currencies, they may either complement or compete with decentralized assets, influencing the adoption of cryptos outside of Bitcoin. The ultimate question remains, will these digital assets be regulated similarly to Bitcoin, or will they face stricter oversight? The answer will largely depend on future government policies and institutional adoption. With the U.S. embracing Bitcoin as a strategic reserve asset, we are entering a new era of crypto adoption. This move could drive Bitcoin's price past $100,000, or even higher, depending on future policies and global adoption trends. Institutional investors, hedge funds, and even banks may increase their Bitcoin holdings, further legitimizing it as a financial asset. If governments around the world start competing to accumulate Bitcoin, demand will skyrocket, reducing supply and pushing prices even higher. Another key factor is regulatory clarity. The U.S. government's stance on Bitcoin suggests a more structured regulatory framework may emerge, allowing businesses and financial institutions to integrate crypto into their operations more confidently. States like Texas and Wyoming could follow the federal government's lead, creating their own crypto reserves. Other nations, including Japan and Singapore, may also adopt similar strategies, fueling a global Bitcoin accumulation race. Finally, the role of retail investors cannot be ignored. As more individuals recognize Bitcoin as a legitimate store of value, mainstream adoption will continue to grow. This could lead to widespread use of Bitcoin as both an investment and a medium of exchange. Additionally, Bitcoin's inclusion in government reserves sends a strong signal to corporations that were hesitant about crypto adoption. Companies such as Tesla and MicroStrategy have already made large Bitcoin purchases, and more corporations could follow suit, further driving institutional adoption. As Bitcoin adoption increases, scalability and security improvements will become crucial. The development of Layer 2 solutions such as the Lightning Network will help Bitcoin handle a higher volume of transactions, making it more viable for everyday use. Finally, if Bitcoin continues to solidify its status as a digital asset, it may pave the way for broader cryptocurrency integration in national economies. Governments could explore using blockchain technology for record-keeping, voting systems, and financial transactions, creating a more transparent and efficient financial ecosystem. The establishment of a U.S. Bitcoin reserve could set off a domino effect across the financial world. More governments may soon follow suit, accelerating the institutionalization of Bitcoin as a global store of value. If major economies like the EU, Japan, or India decide to stockpile Bitcoin, demand could rise dramatically, driving prices to unprecedented levels. On the flip side, regulatory hurdles remain a challenge. While the U.S. has embraced Bitcoin in a strategic capacity, it still faces scrutiny from lawmakers and traditional financial institutions. Future regulations could either bolster Bitcoin's position as a legitimate reserve asset or create barriers that slow its growth. Another key factor is how Bitcoin integrates with central bank digital currencies, CBDCs. If Bitcoin can coexist with government-backed digital currencies, it may further cement its role as digital gold, a neutral asset independent of national economies, providing stability in times of financial uncertainty. Investors, both institutional and retail, are watching closely. Hedge funds, corporations, and even retirement funds may now reconsider Bitcoin allocations in their portfolios. As the narrative around Bitcoin shifts from a speculative asset to a legitimate financial tool, its adoption will likely accelerate. The real question remains, is this just the beginning of a much larger financial transformation? Or is this a temporary experiment that may evolve in unexpected ways? Only time will tell. The U.S. government's decision to create a strategic Bitcoin reserve is a historic moment that redefines the role of cryptocurrency in the global financial system. Bitcoin has officially moved beyond being an alternative asset and is now a strategic economic tool recognized by one of the world's most powerful nations. This shift could lead to a global race to accumulate Bitcoin, pushing prices higher and driving broader institutional adoption. However, regulatory clarity and technological advancements will play a crucial role in determining Bitcoin's long-term success. Whether you're a believer in crypto or a skeptic, one thing is clear: Bitcoin is here to stay. The only question is, how high will it go, and how deeply will it integrate into our economic systems? Let me know your thoughts in the comments below. Don't forget to like, subscribe, and stay tuned for more updates on the future of finance. See you next time.